Today we are blind ranking the MAG7 stocks based off their free cash flows. My name is Matthew. Hope you guys enjoyed this kind of content. If you guys do, make sure that you leave a like and subscribe to the channel. Let's get straight into it. No delays, no nothing. Let's get right in. So I have this tier list here going from S to D, and S being the best, D being the worst, and we have all of the MAG7 stocks plus a little extra bonus here. And we're going to get into what I believe is actually the best value or the best price to free cash flows, free cash flow margins, all of that in this video. Let's start with Nvidia. Let's look at Nvidia as a free cash flow standpoint, where they stand. This company's been growing free cash flows. Oh my goodness, it is actually insane the past couple of year-over-year quarters. This is like 100%, 200%, 80%, 50% free cash flow growth consistently throughout the past 2 years. They have a price to free cash flow currently of 64. And even though this might seem kind of high, I think it's actually very justified given that they are growing very, very quickly. They have a free cash flow margin of 43%, meaning of their revenues, 43% of that comes back in free cash flow. This is astonishing for a company like Nvidia, given that they are a hardware company that is getting kind of software margins and getting insane amounts of free cash flow. I'm going to go on a whim and say this actually belongs anywhere between the middle of S and A. But if I had to choose, let's go S tier for Nvidia. They're earning free cash flow like a beast hand over fist, and every single year they continue to destroy. Microsoft. This free cash flow has been kind of stagnant over the past year or so, but they are able to give us a 53 price of free cash flow. Though their free cash flow margins have been dropping, it seems that they just are getting less free cash flow when it comes to their revenues. Something is slowing down in free cash flow. Maybe they've been investing a lot into AI. Who knows? Just based off a 53 alone with non-free cash flow increasing, this is going to give me the option to just throw this into a, I want to say a B tier. Speaking of Microsoft, they're able to just grow their business year over year, like 15%, growing their income of like 15%. So this is actually like very good. It's just not translating to free cash flow. It probably is because they actually are investing in a lot of like capex here, like another 3 billion year over year, which is probably why you're seeing this discrepancy of free cash flows just being stagnant. Overall, the business is doing extremely well. On a free cash flow side, I gotta give it a B tier. Apple looks like kind of like Microsoft here. You're not really touching free cash flows growing much. Like it's just kind of stagnant. If anything, you're losing 8% year over year. Price to free cash flow of Apple is about 40, and the free cash flow margin is about 23%. It's actually been dropping over the course of a couple of years and quarters. Apple, as we know, has been a kind of stagnant company. They haven't grown as much in terms of revenue and net incomes like the other big tech names in the MAG7. It really makes me question why the free cash flow hasn't really moved, and you can kind of see it clearly. It's because, you know, revenue and net income hasn't been increasing. They really need to come out with some kind of new lever to get money back into the business. Maybe this new iPhone will do it, but I don't know. I don't think an iPhone cycle can move a company like that. They are buying back a bunch of shares, but overall, the free cash flow number is what it is. You're still paying a price to free cash flow of about 40. Given that it hasn't moved, they haven't grown, there's no other aspects to Apple, I'm gonna give it a freaking C tier. I think I have to. If anything, it might belong down here, but I don't think it deserves that hate yet. So we're gonna keep it at C tier. Google free cash flow. Let's see. It's been kind of like cyclical almost, where you see this like drop and then increase and drop, but year over year, it's up about almost 10% free cash flow growth. Price free cash flow has been increasing, given that the stock's just been increasing all the way from 170 bucks to 250 in the most recent like quarters. So given that this has gotten a very steep price increase, it's actually been re-rated to better valuations now. And I think it's well deserved. The free cash flow margin has been dropping just a little bit, about 18, not as much as you'd want to see out of a company like Google that's mainly like software and advertising. So we know Google, this is a killer company, 13% margins, not 13% margins, 13% revenues with net income of about 30% year over year growth. It just looks like they're increasing their capital expenditures by almost, what is this, 12 billion year over year, which is why you could see this free cash flow just drop like year over year. This is probably straightly directly correlated to that capital expenditure that they're putting out there. So given that their free cash flow number is about a 45, hasn't really moved much, I want to say this kind of belongs with Microsoft, where they're putting a lot of money into data center, AI kind of capital expenditure items that it makes sense to where not the best, not the worst. B tier. Now, Amazon's actually an interesting one here. We can see that free cash flows have been decreasing year over year, and it's actually down 72% from the previous year. The price of free cash flow today is about 169, and their free cash flow margins are about 2%, which is kind of horrendous. I'm not going to lie. Though I do think that if you were to value Amazon, you probably want to look at operating cash flows just because that takes capital expenditures out of the equation. But it does look like they are actually increasing their capex stake here, and that's like what, $15 billion year over year. So I think as a growth company, Amazon wants to just keep plowing their money back into the business year over year and have it grow for them. And they're not paying out a dividend. They're not buying back shares. So this is their direct way of saying, here's how we're going to put the money back into the business and grow it. Though their free cash flow number is kind of insane, that price free cash flow of 169, I don't really think I can give this a screaming good valuation in terms of free cash flows. Remember, we're only basing this off of free cash flows. So I'm going to put Amazon at a D tier. It looks pretty horrendous to me. Though if I were to actually look at Amazon, remember that operating cash flow is way more important to look at here. Meta, this one actually kind of is intriguing as well. I can see that Meta has grown 1% year over year and has kind of been stagnant over the past couple of quarters, but nonetheless, this is a great company that has been trading at a price of free cash flow of 35. Now, of that, they have a free cash flow margin of about 28%, meaning that 28% of their revenues are free cash flows. This company is actually just killer. You know, they're growing 19% year over year revenues, 39% net income, uh, just buying back their shares, and they are actually investing pretty deeply into their capital expenditures. This is about 9 billion, $10 billion, and their cash flows haven't dropped year over year. It's actually kind of insane. I just looking at this, I kind of just want to go out on a whim and go buy Meta today. I wouldn't be sad with owning Meta because this is a great company at a decent price, and they're printing cash flows, buying back shares, returning it back to the shareholder. But of course, on this tier list, we are only looking at free cash flows. Given that it's at 35 and they're throwing money back to the business, they're growing it, they haven't stopped growing the business, I want to put Meta at A tier. Meta A tier seems good to me. Now let's look at Broadcom here. Broadcom is one of those semiconductor plays where they're growing free cash flows year over year. Look at this, 22, 33%. Price to free cash flow of about 63. The free cash flow margin of about 41%. And if I'm not wrong, this is a hardware company. They this is actually pretty immense, kind of crazy. Based off their free cash flows, they are growing it very significantly. Their revenues have been growing, oh my goodness, 40 to 28%. 270% in net income increase. The year prior, 25%. This company has just gone bananas. They've added a little bit of shares here, and it's been about the same ever since. It doesn't even look like they're increasing their capital expenditures. And overall, I think Broadcom's free cash flow growth has been insane. Though it is at a 64, this company is very, very good compared to Nvidia. You're looking at almost the same, if not growing a little bit quicker. I don't know, if I gave Nvidia an S, I feel like I also need to give Broadcom an S for free cash flow, because they're growing it so quickly year over year, it's insane. Like, that free cash flow number is immense, and I think it is justified given how fast they are growing that free cash flow and the demand that they're seeing for their products. Okay, last but not least, we have Tesla. Tesla is going to be one of those weird ones where free cash flows are actually increasing year over year, 200% year over year, but you are looking at a price to free cash flow number of 247. I think that is insane. Free cash flow margins of about 6%, even though it has been increasing, like from, what is this? I don't know, 1.7 billion to 5.5 billion. over a year. This price of free cash flow just doesn't make sense. It is way out of this world, astronomically high. I actually can't get behind it. Their revenues are stagnant. Their net income has been dropping. Free cash flows are going up a little bit, but what is the lever for this demand? Is it their new cars, the new Y and threes that are coming out? I don't know. Maybe it's probably the autonomous vehicle as well as humanoid robots that are intended to get a lot of revenues that convert to free cash flows later on. But overall, as it stands today, there isn't those in the market that is highly capitalized to where investors are seeing that return as of yet. Given that their free cash flow or their price of free cash flow number is about 247, I'm sorry, I have to give this a D tier. And that is all I'm going to bring today. These blind rankings. Let me know, would you guys have changed anything? And what do you guys put each company at? Let me know. Do you guys own any of these companies? Because I own a little bit of them. And if you guys want to see those, make sure that you're following to follow along for the ride. Thank you guys so much for watching. Peace out.